economic path.
Namaste. As the Minister for Tourism and Multicultural Affairs, it's with great pride that South Australia will host the World Hindu Economic Forum 2025 in Adelaide, the first time this important event will be held in Australia and the Southern Hemisphere. South Australia stands ready to welcome your delegates from around the world, offering a dynamic and supportive environment for economic collaboration, innovation and sustainable growth. The South Australian Government is proud to support this event and looks forward to showcasing our strengths and collaborative opportunities for the global Hindu business
नमस्ते। आरंचीनी बॉल्स नहीं खाए, एनर्जी नहीं आई। नमस्ते। एकदम भारत वाले स्टाइल का नमस्ते। नमस्ते, ये हुई ना बात। Namaste and good morning, everyone. I hope you all had a restful night and recharged for another inspiring day here at WEF 2025 in Adelaide. You have been an amazing audience, and I want each one of you to pat yourself on the back. And let's give a big round of applause for yourself. Louder. Now you are such a lovely audience. I'm sure I don't need to remind you about our Kalyogi ritual. Please keep your phones on flight mode. We are starting this morning with a powerful session, Investing in the Future, Global Capital Markets and Infrastructure Development. To chair this session, I now invite on stage Shri Ranjit Pawar. He is the market head, South Asia Pacific at the London Stock Exchange Group. With over 2 decades of experience in data and analytics, he has been at the forefront of driving innovation in financial infrastructure. He also serves on SEBI's Market Data Advisory Committee and plays a key role in shaping growth strategies across the region. Now, I would like to invite our distinguished panelists for the session, Shri Ghanshyam Ahuja, Group Managing Partner at Thinkuate, and Group CEO of Congruate Global Solution Europe, and Shri Ram Krishnan, Chief Business Development Officer at the National Stock Exchange Bharat. And with that, I now hand over the stage to our esteemed session chair, Shri Ranjit Pawarji, to guide us through this insightful session.
Yeah.
Namaste, everyone. Thank you for, first of all, hosting this wonderful conference. It's hard to imagine such a large Indian community, Bharatiya community in Adelaide, and really glad to see so many of you here because you are, above everything, curious about your countrymen, your country fellows, and what we can do together to further elevate the status of Bharat in the world. I'm personally very curious always about our culture, and from time to time I try to educate myself and update myself on what it means truly to be from Bharat. So alongside my career in the financial services industry, in the data industry, I'm very proud to share even more than the fact that, my engineering degree, I'm actually more proud to share that I have a diploma in Indian archaeology. I also hold a diploma in Indian aesthetics. And this is because I'm truly curious about knowing more about our culture and appreciating the higher form of art, culture, history about our nation. So today, it's not a coincidence that I'm here. I was invited by one of my very dear ex-colleagues from one of the firms where we work together, Mr. Sandeep Khurana. And when I saw the fellow panelists, I actually was wondering why I should chair the session when we have such senior, colleagues on the panel. So I'll consider this my privilege to be chairing today's session. And let me start by introducing our speakers today. Mr. Sriram Krishnan serves as the Chief Business Development Officer at the National Stock Exchange of India, Bharat, a position that he assumed in December 2022. In this pivotal role, he oversees the exchange's business strategy and advocacy efforts, product lifecycle management, all business partnerships, and corporate functions, including marketing, communication, economic policy, and research. With over 26, 27 years of experience in the Indian banking and capital market sector, including senior leadership roles at top global institutions like HSBC, Citi, and Deutsche Bank. Sriram brings deep expertise in institutional banking, asset management, and securities services. At Deutsche Bank India, he served as managing director and co-head of global transaction banking. Sriram, from time to time, stresses on NSE's strategic priorities and how they are supporting the growth towards Bharat becoming a $10 trillion economy. So please welcome Sriram with a big round of applause. Our second speaker today is Mr. Ghanshyam Ahuja, again someone from Singapore. I'm also based in Singapore now, and we have been on LinkedIn and other platforms, but thank you for actually helping us meet in person today. Really glad to meet Ghanshyam in person. He's the group managing partner and co-founder of Thinquvate Private Limited, based in Singapore, an early stage investment firm which he established in 2015. Under his leadership, Thinquvate has evolved into a prominent early stage investment advisor and SEBI-registered AIF fund sponsor focused on India and Southeast Asia, backing startups at the seed to pre-series A stages. Mr. Ahuja recently also led the successful first close of Thinquvate's India-focused fund. This fund invests in high-growth, tech-enabled startups across sectors such as health tech, fintech, AI, ML, climate tech, and more. It already counts global NRIs amongst its partners. Before Thinquvate, Mr. Ahuja also held senior leadership roles across global firms and has extensive experience as an entrepreneur, investor, mentor, and motivational speaker. He's known for his strategic vision and practitioner-led support to startups seeking global scale and impact. Please join me in welcoming Mr. Ghanshyam Ahuja. Now, moving to today's session, I'll be shortly inviting both of them to come and present their thoughts, their insights with this audience. The session today is focused on global capital market access and infrastructure. It's a really important session, particularly on the backdrop of how fast the world is moving towards a unified market platform. And we'll go over some of the ways in which global institutions such as exchanges are helping to support the acceleration of cross-border investment and also for strategic listings. Maybe a good place to start, let me go to my presentation. It's probably to start with, why do firms and investors see strategic listings and cross-border investments as a priority? Plus, that's a good place to start. The way the world is shrinking because of technology and digital infrastructure, today accessing global markets, foreign markets, is no longer outside anyone's grasp or capacity. And particularly when we think of companies who are looking at strategic listings, there are huge benefits in doing so. The more obvious benefits are obviously access to deeper capital pools, diverse sources of capital that are present in jurisdictions outside your home base, listing on a major international exchange like London or Mumbai connects a company to some of the world's biggest institutional and retail investors. London, for example, is home to deep pools of international capital, including many of the world's largest funds, and several Australian companies and Indian companies have also been listed on the London Stock Exchange. As a matter of fact, over 40% of the companies listed on the LSE are actually from outside UK. Australian healthcare firms like Wellnex Life, who are listed on LSE, also share that it provides them access to deeper pools of capital. strengthening their balance sheet for expansion. So in short, a broader investor base can support large equity raises than might be possible domestically, fueling further growth initiatives. So that's one of the key reasons why companies look for strategic listings, and these could be dual listings, these could be ADRs, GDRs, so there are different routes to raising capital overseas. The other advantage is also having enhanced corporate profile and credibility, which again helps strengthen the valuation of these firms. So listing on prestigious exchanges can also elevate a company's global profile. For example, the LSE's main market is associated with prestige, high visibility, media coverage, all of which help boost a company's public profile. The heightened profile can translate into greater customer and partner confidence around the world. Furthermore, complying with strict regulatory standards of an exchange like LSE or NYSE signals that a company meets high governance and transparency benchmarks, which again builds investor confidence in the firm's practices. But even for investors, there are several benefits of looking at cross-border investment opportunities, starting with portfolio diversification, access to growth. So global listings allow investors to diversify into markets and sectors that may be underrepresented or unavailable in their home market. An Australian investor, for instance, can buy into an African telecom operator like Airtel Africa via its LSE listing, or an Indian investor can invest in a US tech company via its local ADR. This access means investors can participate in high growth economies and innovative industries worldwide, rather than being limited to their domestic market's economic fate. Emerging markets become more accessible through international listings. For example, again, when Airtel Africa floated its listing on the London Stock Exchange, UK global investors could easily invest in a telecom business that spanned 14 African countries. And in today's environment, geopolitical risks, again, are something that investors require a hedge against. So risk mitigation through geographic spread is another very strong reason for investors to consider cross-border investment. A globally diversified equity portfolio can reduce volatility. Markets often move in different cycles, and by holding international stocks, investors can buffer their portfolios against downturns in any single country. Cross-listed stocks also contribute to this by making foreign companies as easy to buy as domestic ones on a familiar exchange or platform. For large institutional investors, being able to invest abroad is again crucial to achieve steady long-term growth. Many Australian superannuation funds, which you are probably more familiar with, also allocate a significant portion of their assets to global equities. Cross-border listings and trading links facilitate this, again by providing transparent, regulated avenues to invest overseas, often in the investor's home currency or with easier exit options than the foreign markets. So that's the broad context for today's discussion. We'll probably go deeper as Sriram and Ghanshyam bring their insights, their experience to talk about how their institutions, their firms are facilitating this. Now, while I'm on the dais, I would also like to take a moment to talk about how the firm I belong to, the London Stock Exchange Group, and quite often the name London Stock Exchange can mislead people into thinking the group is largely an exchange, whereas the group is actually a very highly diversified portfolio. We not only own the exchange, which is one of our largest trading venues for equities, but we also own a number of other venues such as FXall, which is one of the world's largest FX trading venues. We also have a 51% share in TradeWeb, which is one of the largest fixed income trading venues. And besides that, our largest investment is in data and analytics, which is part of a $8.5 billion revenue, and almost 70% of the revenue actually comes from data and analytics. So it's a very well-diversified group, but of course the exchange is one of our largest brands, and also the flagship trading venue. Now, how do we support global connectivity? So as I mentioned before, the LSE is truly global. Over 40% of the stocks are listed, which are non-UK companies. Over 60% of the investors in LSE listed stocks actually are from outside the UK. And the main market and AIM, which is for growth companies, host over 2,300 companies from 70 countries. So you can imagine the scale of globalization and global connectivity that the LSE provides. Besides that, also is the advanced market infrastructure that the LSE provides. So the electronic trading platforms, which are low latency, resilient, fully integrated, and also the London Clearing House, which is one of the most trusted clearing houses globally. As a matter of fact, over 70% of interest rate derivatives get cleared on the London Clearing House. And then we also support sustainability. It is part of our company's core mission, sustainable financial growth. So fixed income, green bonds, emerging markets, we provide access also in these sectors. We are home to the sustainable bond market. We have a voluntary carbon market, again, where ESG-minded investors can tap into high-impact green and social bonds. We also support emerging markets through bonds such as masala bonds, which some of you may be familiar with, and NTPC, HDFC, NHAI, they all have issued masala bonds on the LSE. These are INR-denominated debt bonds, which basically help the companies to hedge against any currency risks that they face in their home countries. So while the investors take the currency risk, the issuers are actually protected from any currency risks. And then the data access and transparency that the London Stock Exchange Group provides. As I mentioned, we acquired a very large data analytics firm, Refinitiv, for nearly $26 billion. And what it does is it helps us to deliver more visibility into financial data, ESG scores, real-time prices, and regulatory disclosures. This means that global investors are equipped with the right insights to make informed decisions anywhere, anytime. Last but not least, the LSE also operates under the watch of the Financial Conduct Authority, which ensures very high standards of corporate governance, disclosure, and investor protection. We offer multiple listing segments, such as the premium and standard listings, which are tailored to different issuers, while giving investors a clear benchmark for regulatory oversight. Recent capital markets reforms in both UK and India have also now made it possible for an exclusive cross-listing framework to be introduced, which will enable companies in both markets to seek a secondary listing in the other. So that is something surely to look forward. But while we are doing this, we are also not ignoring a very important aspect of the market, which is the private securities or the private capital markets. These markets have exploded in recent years. Almost a 20-year cycle of low interest rate funding has helped companies to stay private for longer. And investors, on the other hand, are very hungry for exposure to these high growth pre-IPO opportunities. But historically, there's been a lack of infrastructure for transparent, scalable transactions in private markets. And that is something the LSE is also very well poised to solve. We have very recently launched our private securities market under the PISCES framework of the UK. What this does is offer structured liquidity for founders, early investors, and also to the employees of the private firms. It enables price discovery through transparent auction-based secondary trading, provides investor protection through eligibility standards and curated disclosures. So in short, it brings all the benefits, all the structure, framework, and protection of the public equity markets to a private listed market. So these are private securities markets. So that's broadly how the LSE and the LSE group is supporting not only strategic listings, but also cross-border investment platforms. I will take a pause here and actually invite the second speaker for today to elaborate on this topic, and then we will have some question and answer session at the end of both presentations. Thank you for your patience, and let me invite Mr. Ghanshyam Ahuja to come and present his views now. Thank you.
Namaskar to Vishwa Hindus, world Hindus here, नमस्कार. एक बार फिर से नमस्कार करते हैं. नमस्कार, क्योंकि मेरा टॉपिक वो है स्टार्टअप का जिसमें बहुत ज़्यादा एनर्जी होती है. So I will use some Hindi words with kind permission of Swamiji. Swamiji, namaskar. Let me start by sharing a story, what happened for this event. First of all, thank you Ranjit Bhai for introducing us. And once again, namaskar, good morning to all of you Vishwa Hindus here. If I ask you, 20 years back, there is a company called Google. Who would have invested? No one would have invested, right? Because it was the 17th search engine, not the first, right? Likewise, what happened with me, frankly speaking, I can openly share with you, the World Hindu Economic Forum was almost like a startup for me. I didn't know about it, I'll be upfront with you, and I feel sorry about it, by the way. I should have known. Thanks to our friends from Sydney, Manishi Bhai sitting here, Bob especially, who met me, and of course, our, मैं आज तो इनके स्माइल का कायल हो गया हूँ, राजेंद्र भाई. Rajendra ji, when I spoke to him, and then Swamiji himself came on a call, thank you for that. So it was almost like a startup moment for me when I realized that, hey, how come this kind of organization I am not aware? I should be aware. And then and there, I decided I'm going to invest my time, money, energy, and not just me, I'll bring my partner and come in and support this kind of organization. So it's like a deja vu moment. Why I'm sharing with you this, I felt while this event that it's actually a startup kind of an event for me. Something I didn't knew 2 months back, 3 months back, and today I'm totally committed for last 3 days. So welcome guys, my name is Ghanshyam Ahuja. I'm the founder of Thinkuvate. As you heard, we are an early stage investment firm, and we believe in something which is going to grow much bigger, the way World Hindu Economic Forum, when maybe my grandchildren will be there, they'll be proud that someday somebody from my grandparents, somebody invested time and money into this kind of organization. So that's what we do for startups. Let me start with a quick introduction of why startups, why innovation, and why is it that the same question I asked you, even in Google, I may not have invested then, 20 years back. Today, if any new Google is coming up, if any new startup is coming up or being brewed in a workshop, we are there to help them, which is what we do. Let's start with quickly sharing what is happening in this world and why it takes time for us to understand the value. So I'm sure you must be aware of this, all of us coming from 30, 40, 50 plus years of age, right? So you have seen, all of us have seen the evolution of technology, right? From basic computers, servers, all the way to internet, and from internet to mobile, and most of us have been through this journey, right? What's happening is, earlier days, if you see from 70s to 2000, it took a lot of time to reach from computers to internet. And from internet to then mobile, social media, what I used to call in 2012, when I had this moment of understanding startup, SMAC, social, mobile, analytics, and cloud. What's happening is the technology is changing at a speed where our mind even cannot digest. So which is where these kind of forums are important to talk about IT, innovation, startups, which opens up our mind, which opens up our parachute of our mind. So what's happening now is, if you see, the gap between technology growth is reducing. What used to take 30 years to grow from one internet, the computer era to internet, it's taking less than 10 years. With AI now coming in, people are afraid of how much it can go faster, right? But my point here is, guys, you have a chance to be part of embracing that technology instead of getting worried from it. So that's where whole innovation and innovation investment comes in. So I'm sure since last 2 days, from different dignitaries and different speakers you have seen, these are 12 mega trends, which I will not read for you, but it's self-explanatory. The kind of things are happening, all of us are actually seeing. Climate change, one of the key theme of this event, right? Demographic shifts, people are getting, like, I'm sure, I don't know if you're aware, in Singapore, I see helpers who are coming to help in the house. They have iPhones. They have phones better than the homeowner, right? I'm sure in Bharat you have seen the growth of Paytm, right? QR code. I was super impressed, even though I have lived in Singapore for many years now, super impressed, a bhajiwala sitting on the floor of the road having QR code, right? That's the level of innovation the countries are doing. I was impressed with Bangladesh, if you know, in around 15, 20 years back, on SMS you can do payments, right? Bangladesh kind of a country. And I can tell you openly that even Singapore was not, versed with the payments that time, around 15 years back. So these are the demographic trends which are changing. Technology is changing, rapid urbanization. I can see tons of investments happening in Australia in infrastructure, right? So every infrastructure, every industry which is going through a change needs a lot of innovation, right? Mind you, one thing I can share with you that while being into this innovation journey for last 10 years, not just IT, not just e-commerce, simple, I'll give you a simple example, agarbatti. My business in India, my family business is kitchen appliances. I make sure I go to my shop at least once just to see what is a new innovation in agarbatti. In puja thali, hum log alag, we used to have different kind of diyas, right? Now, same, puja thali also comes as innovative thali. The point I'm driving here is, guys, that the trends which are changing in front of you, you have to decide and think, so what for me? If I'm here in Adelaide, I'm hearing a lot of you, I'm hearing Australia, if I hear that aged care and infrastructure and property is something happening, I'm asking question to myself, so what to me? So what to Thinkuvate? So what to other investors here? So my humble suggestion, what if I have to leave some messages with you, is that look around what is happening and make sure you ask this question, so what, and how can I be part of it? How can contribute more to this particular thing? Now let me give you some more perspective about startups. Global startups funding has been growing very fast. You might be hearing a lot of good stories. And by the way, whatever stories you hear, it's only 10, 20% success or 30% success. Mind you, definitely 60, 70% you might be hearing a lot of failures. But the important thing is, if you support 10 overall journeys, you are guaranteed that the 3 to 4 success stories will come from the examples what you are seeing here, the kind of funding which is going on, number of IPOs, number of unicorns. India has close to 120 unicorns. Before this, Australia, I was invited to Uzbekistan, and I was so happy the day we landed there in Uzbekistan, same day the first unicorn of Uzbekistan was announced. So you see the kind of growth happening. I was super impressed. I must want to mention here, I was very motivated by hearing to our Nepalese delegates here, Mr. Joshi, Mr. Pradeep, and all the delegates. I didn't knew about the kind of things going on in Nepal. And even country like Nepal now is talking about startups and innovation. And we are here to support you. That's what yesterday, first thing I did, I invited them to Thinkuvate's booth and said that we want to support you. This is what I would urge all of you here, that we should support any new initiatives in a country or in a particular startup. So this is the India startup ecosystem, one of the most prominent top 3 in the world currently. 125 unicorns. Almost like every few months now, you will see some unicorns or sunicorns coming in. Tons of examples. You can see also below some of the trends which is happening is that number of users of the products, what you see, Google, Meta, is day by day increasing. And a lot of companies are in fact coming first to India rather than starting even in Europe, or first to Asia, right? That's what we are hearing. I just partnered with a company which was the company from US, and very rarely I used to hear in my career that company is going global from day one. Day one, AI companies. They are not waiting for Europe to be matured, Asia Pacific to be matured. First, let's come to Australia and then go to Asia. They are coming global. So that's a trend which is happening. Now, why startup investments? The reason is very clear. As I told you, like Google, you may not have invested 20 years back, but now everybody would be regretting that I wish I would have even invested $5,000. Like sometime we talk about crypto, right? But I'll not go into that area, but more about startup investment. If I give you the analogy, I'm sitting with my panelists here from LSE and NSE. If a company gets an IPO, it's almost like getting married. कि आप settle हो गए आपकी company, आप married. What is startup investment is what all of us as parents have seen. Growing somebody as a baby, going through their primary, secondary school, teenage, and from there on, then pass it on to them. So I would say startup is actually like a baby in an incubation. We help it. All of us know very well as parents what it takes to grow a baby from a baby to a teenage. And the reasons is, a baby only will grow to become a settled man or a woman, which then grow the whole house and whole society, which is what startup is all about. So you invest in a startup for different reasons, for high growth potential. You also invest for diversification, because what I request and all investors here is that if you have $100 to invest, maybe leave your $10, $15 for startups, which is a high growth, and maybe remaining you can do in stocks, property, and others. We'll see some examples there. So this is the key thing which you can understand. A lot of people ask us, especially in Australia, I have seen 99% of people said, I'm invested in property. So definitely there are different asset classes, as you can imagine, real estate, gold, public markets, fixed income, and you can see the difference there. Of course, there's high risk and high reward. There are companies who can grow just from a 5 million valuation, we have seen in our own journey, to a 50 million valuation in just 10 months' time or 2 years' time. There are examples in this part of the world where unicorns have been created in just 3 years' time from the way they started from zero. There are examples like that. But of course, there is high risk as well, as you will say. So the only suggestion we give to people is that diversify your risk, invest in at least 10 new ideas, new innovation, new startups, and then you are bound to get success in 3 at least. That's a whole game about the startup investments. These are some other examples, successful stories. Facebook, of course, everybody knows. Uber. Just to give you one example, 9 years back, we got an offer from Uber, somebody who was selling $1.5 million. We were very new, very naive. We asked questions. We are very new. Thinkuvate is very new. Why this offer is coming to us? We were wrong. And now I think that we should have invested, because somebody was selling a secondary stock from a founder's quota. We didn't know all these terms. Now we understand. I wish I would have done it. Of course, Zomato, Flipkart, and many examples in Australia and New Zealand also. You might be having your own examples here. And people ask, how do I get exit? How do I get returns? Returns are mostly given by the next investor, right? Suppose I'm invested in company X at 5 million valuation. After 2 years or after 1.5 years, some of you may come in and say, Ghanshyam, I like this company. I want to invest at 20 million because company would have grown by then. And say at 20 million, you may give me exit because Ghanshyam, maybe you are a small investor for $100,000. Your money has grown to 450. Here is your 450. Let me invest in this company. So that's how we exit. Or you get a M&A, merger acquisition. Some of the company may like a startup, want to buy it. Or of course an IPO. I'm sure NSE, LSE, our colleagues here will share with you. SME IPO has become a big wave in India, right? So these are the options where companies get exits. And important thing is reasons for failure also. It's very important duty for us to tell you why they fail, and which is where we come in as Thinkuvate, as the fund managers. We make sure that most of these risks are covered by our due diligence and by our process, what we go through. Lack of funds, the macro factors about the market, competition, new technology. Like a lot of companies have failed in last 5 years just because AI has come in. And companies are coming with AI first kind of an offer now. Hostile takeovers. We ourselves, I'll be open with you, have seen out of 30 companies. By the way, we have seen 12,000 companies in last 10 years and only invested in 30. So you can imagine the kind of rigor we go through before selecting. So we had to go through those kind of things, founder issues, co-founder issues, and board conflicts. So we have tried to solve most of these problems in last 10 years. This is my last point. Risk mitigation is very important. As you heard from other speakers, you will hear from our LSE and NSE delegates here. Risk management is the most important thing to take care in any investment, and which is where you have to go through many things. Examples are in our world, we even talk to their partners, investors, customers. We have even spoken to some of their past employees in some of the cases and said no to the company after hearing some past employees. So these are the risk mitigation models and different methodologies what ThinkQuate applies for selecting. I'll stop here, and then the last point I just want to share with you is that, hey, what you hear about Silicon Valley, what you hear about Google, what you hear about NVIDIA, that's the story from Silicon Valley. If you think you want to be part of Silicon Valley, this century is all about Asia Pacific, APJ. Take risk, what they have been taking from last 50 years, and last 10 years, it has come in front of you. Now it's your time to take risk and support the new innovation. Thank you, and let's help the Bharatpreneurs and Hindupreneurs. Thank you.
May I invite our second speaker, Mr. Sriram Krishnan, to now address the audience.
A very good morning to all of you. Respected Swamiji, Rajendraji, the working committee, the organizing committee of the World Hindu Economic Forum. First of all, thank you so much for this opportunity to speak with you today. I want to extend heartfelt thanks to the team that has put together this event. It's a fantastic event, and I think we are all having a productive time. I'm here to talk about the India story, the story of National Stock Exchange, and see how we can all benefit by knowing a bit about how India pulled it off. I want to go back to 1947, when India became independent, and remind you that India was one of the poorest countries at that point in time, with absolutely no scope whatsoever, because we had been, I think, terribly looted and left to fend for ourselves with practically no resources. From that point onwards, we've been trying to figure out the best way forward. And even if you look at the year 1990, we were nowhere in comparison to where many other countries had been at that point in time. So I'll just give you an idea of how the world looked like in 1990. This is how the capital markets of the world looked like in 1990. If you look at the market capitalization of all the companies listed in the US, it was about $3 trillion. Tokyo was about $2.7 trillion. London Stock Exchange about $1.7 trillion. Rest of the world about $1.4 trillion. Rest of Europe, sorry, 1.4. Rest of the world about $900 billion only, $0.9 trillion. India was within that rest of the world with probably about $200 billion of market cap. Fast forward by roughly 30 years, 35 years, come 2025, India alone has a market cap of $5.5 trillion. And it's the fourth largest market in the world. And the way we have transformed ourselves has a lot to do with what we did during these 30 years. NSE was the outcome of a task force that was set up in 1992 after a massive scam rocked India, the Harshad Mehta scam, which many of you will be aware of. Back in those days, the stock exchanges around the world, including the one in India, were predominantly owned by the brokers, controlled by the brokers. There was no transparency. There was absolutely no settlement guarantee. There was no clarity around the way this framework worked or was supposed to work. In the middle of all this chaos, the task force came out with a new blueprint to do business in a different way. And the NSE was conceptualized. So the NSE went live in 1994 with 4 distinct differentiators compared to the other exchanges prevailing at that time. The first distinguishing factor was that NSE was going to have online screen-based trading, a first of its kind at that time. Secondly, NSE was not going to be owned by brokers. It was going to be owned by 12 institutions, and the brokers had no say whatsoever in running the NSE on a day-to-day basis. It was all left to a professional management team. Thirdly, anybody who wanted to become a broker of NSE was going to be able to become a broker. Anybody who fulfilled the eligibility criteria could become a member of the exchange for the first time. This was so unlike the other exchanges, which were all like private clubs, where membership passed on from one generation to another, and nobody else could get in there. And all of these things, plus the fact that NSE offered settlement guarantee. We set up a separate entity called the Clearing Corporation, and we said settlements are guaranteed, completely guaranteed. Not just that, NSE had a very significant achievement in the first 10 years of its existence. Between 1994 and 2004, NSE did something amazing. We set up a company which was the first depository of India, NSDL, which has just finished an IPO, a very successful IPO, a record-breaking IPO, and is going to get listed on the 6th of August. NSDL dematerialized or electronified the physical share certificates that used to be such a problem in India back in those days. So all of a sudden, from an era where everything was paper-based, we moved into an era where everything was electronic, not just the holdings of shares in the accounts, but also the method in which you could trade in those shares, buying and selling of those shares. So this is what NSE achieved in the first 10 years of its existence. And slowly, we started building a trust quotient, a very special trust quotient, which means that raising capital is extremely easy in India. I think one of the things that I must point out is that in 2024, NSE was the largest exchange in the world for IPOs, ahead of NASDAQ. For the first time ever in 30 years, this is something that we have to be incredibly proud of, because this is a homegrown institution which has become a world #1 in many ways. And you look also at what's happening around the world in 2024, and then you'll know why it is so special for NSE to be occupying this position. Last year, the London Stock Exchange saw 18 listings, but 88 delistings. The Tokyo Stock Exchange saw 72 listings, but 94 delistings. The Singapore Exchange saw 4 listings, but 20 delistings. The Hong Kong Exchange saw 71 listings, but 47 delistings. And in the middle of this all, NSE had 268 listings and no delistings. And these 268 companies raised about $19.5 billion. So the existential objective of NSE, which was to help people raise capital, to help entrepreneurs come to a credible platform where the country will trust itself, where the people will trust themselves and invest in dreams of entrepreneurs. That's the platform we have created. Today, the countries of the world are envious of the framework that we have put together. And look at what this framework has delivered. We used to have 4 million unique investors back then when we went live in 1994. Today we have 115 million unique investors on NSE. Right? Back then, we had only a physical share certificate dominated operating environment. Today, everything is electronic in India. And to an extent, people think that if you buy shares, you don't even need to check your demat account. The shares will automatically get credited on the settlement day. This is taken for granted. Nobody checks. That's the kind of trust quotient that we built. Digitalization through India's first fintech, perhaps. That's what NSE is in some ways. NSE is perhaps the first IT company as well of India, and inspired the other IT companies to come to the fore. And that's what happened in the 90s, and that's what catapulted India to a different zone altogether. NSE today is a global leader, as you can see from this slide, in a number of ways. In terms of our credentials, we are the largest multi-asset exchange in the world. We are the largest derivatives exchange in the world for the last 6 years on the trot. We are the largest exchange in the world last year for IPOs, and we are the second largest exchange for equity trades based on latest volumes that have been published by the World Federation of Exchanges. And in terms of market share, after the initial liquidity shifted from the BSE to the NSE when we went live, within about a year of going live, after that point till today, we are about 95% market share in cash equities and 90% or thereabouts, more than 90% in most of the other asset classes as well. In terms of trading infrastructure and the presence in the market and the reach, we have more than 200,000 terminals across the length and breadth of the country. We have penetrated 99.9% of the PIN codes of India, postal codes of India, which means there are only 25 postal codes where we have no investors. And these are mostly airports and defense installations where there are no people actually living. So that gives you an idea of what NSE has achieved. True democratization of the entire information access, plus everybody being able to participate in stock markets today. What NSE has achieved or delivered to India is about 17% of the population participating in capital markets and leading to a dominant entity being, dominant country being possible, the growth and development of which is in safe hands. Bharat today is the third largest digitized country in the world. This is based on the CHIP score. India has a CHIP score of 39.1. Only US and China are ahead of India. And that is a terrific achievement for a country like India that came from nowhere in the 1990s. Digital public infrastructure, again, the UPI stack that we have built, whether it's the Aadhaar-enabled services, Aadhaar Pay, eKYC, or whether you look at the Bharat QR code and how it is being used, any which way you look at it, it's a revolution. We are a living example for many, many countries today in terms of how digital public infrastructures can operate effectively and generate and contribute to the larger good of the people and the development of the nation. The role of fintechs in building Viksit Bharat also needs to be understood, well understood and appreciated. I will take a couple of minutes to talk about some of the well-known fintechs. Who does not know Paytm? For example, they were an admirable fintech that revolutionized the concept of paying through the mobile phone at every nook and corner of the country. PhonePe is another fintech that comes to mind. They are the dominant UPI player with about 47-48% market share of all the digital payments in India today. Razorpay, another payment gateway that's used so massively, and they have contributed to the ease of doing business that is today seen in India, experienced in India every single minute. Perfios, another fintech, which has helped online credit decisions. Today, you'll be very surprised. If you go to an electronic store in India, you're thinking about buying a mobile phone, you think it'll be a good idea to get a loan to buy that mobile phone. It'll all happen within seconds. And Perfios is a system that helps that process. And there is another fintech I'll talk about, Cred. They did something mind-boggling. They identified the best of the best in India who need to be rewarded, the credit-worthy individuals. That's the cream of the cream, which the banking industry has been trying to decipher for the last 30 years. And these guys deciphered it in 2 years. So this is what fintechs can do. They can bring a lot of unique knowledge, unique features through their apps, through their front ends, and make possible what seems very, very impossible. To summarize, India today is at a GDP of $4.4 trillion. That's expected to go up to about $10 trillion by 2035, and possibly go up to about $25 trillion by 2047. by which year PM Modi ji thinks that we will be Viksit Bharat. So in this journey, if you look at the market capitalization of companies listed on NSE today, it's about $5.5 trillion, like I mentioned earlier. So $4.2 trillion of GDP, $5.5 trillion of market cap as of today. If we have to go to $10 trillion of GDP by 2035, then the market capitalization of companies listed on NSE should be about $11 or $12 trillion by 2035. That means we have to double what we are in 10 years' time. So it took us about 3,000 companies to get here. We probably have to get another 3,000 companies onto the platform in just 10 years' time. That's the kind of speed and progress that we are looking at. It's going to be a revolution of sorts. It's an exciting time to be in India, and it's exciting to help so many companies raise capital, and it's exciting to launch products. It's exciting to be leaders in innovation, leaders in technology, and it's exciting to set an example to the rest of the world. Thank you very much for this opportunity to share my story, the story of NSE, the story of India. Thank you very, very much.
Thank you, Sriram, and thank you, Ghanshyam, for sharing such amazing, valuable insights and views with the audience today. I'd like to summarize a bit and then open the floor for any questions. I'm sure there are many questions here for both speakers. I'm equally happy to answer anything that would have been of interest to you. Let me just quickly summarize some of the key highlights, and then I'll come to some of the audience. I can see a few hands being raised already. Maybe I'll start with Sriram and then go backwards. I think Sriram pointed out such a fascinating story that the Indian markets and NSE both have been in the past few years particularly. And as someone who's responsible for the geographic strategy even within the LSE, I often get this question about investing into India. And each time I bring up a slide which shows the growth of the AUM, the growth of the retail investors in India, it is astonishing and sometimes difficult to help people realize that it's actually true. That is the kind of growth that the country has achieved. So I think Sriram did a great job in also taking us through how that structure is supported by a digital platform for both